Assalamualaikum. Welcome to Kaplan Kit Practice Session 4. Our next question is Paloma has been trading for a number of years. Her tax adjusted trading profit for the year ended 31st May 22 was 58,000 and for the year ended 31st May 23 was 57,200. What is the amount of class 4 NIC contribution payable by Paloma for the tax year 22-23? So our first tax year accounting year ends on 31st May 22. This date lies in tax year 22-23. So we only have to consider this amount of profit. As per rules, we have to consider how much of profit will be taxed at different rates. So as she is a sole trader, amount between 50,270 and 12,570 will be taxed at 10.25%, and amount above 50,270 up to 58,000 will be taxed at 3.25%. So first has a amount of 3,864 and this is 251. So both when added, this is amount of 4,150. सो हमें यही कंसिडर करना है सर कि आपको जिस अकाउंटिंग ईयर के हवाले से बात की गई है वो अकाउंटिंग ईयर किस टैक्स ईयर में लाया करता है, उसके मुताबिक आइडेंटिफाई किया कि जो आपका अकाउंटिंग ईयर 31 मई 22 को एंड हुआ था ये लाया करता है टैक्स ईयर 22-23 में, और क्वेश्चन में हमारे से 22-23 का ही पूछा गया है. नेक्स्ट क्वेश्चन, एल्सा इज एम्प्लॉयड बाय बी लिमिटेड. During the tax year 22-23, B Limited provided ELSA with the following benefits: private gym membership and contribution of 1,800 to private pension scheme. ELSA had use of the private gym membership throughout the tax year. The normal membership fee is 1,000, but the B Limited negotiated a discount and paid 900 for it. Now, what is Class 1A National Insurance contribution that is to be payable for the tax year 22-23? If we talk about the private gym membership, we have to consider the fact that the amount to be included in the taxable income of employee is the amount incurred by the employer. So amount incurred by employer is 900, right? And as regard to contribution of 1,800 into private pension scheme, employer's contribution to pension scheme is an exempt benefit. So we just have to calculate benefit on this 900 of amount at the rate of 15.05%, and this will be 135.45. तो हमें ये कंसिडर करना है कि हमारे पास एम्प्लॉय को जो बेनिफिट प्रोवाइड किया जाता है उस बेनिफिट को प्रोवाइड करने के लिए एम्प्लॉयर की क्या कॉस्ट खर्च हो रही है, दैट इज सेट टू बी द टैक्सेबल बेनिफिट ऑफ एम्प्लॉय. सो 900 है और एम्प्लॉयर की कंट्रीब्यूशन टू द pension contribution is exempt benefit. Next question, how much of class 1A NIC is payable in respect of Colo's company car and by whom is it suffered? Colo is an employee of Lapsang Limited. He is paid a salary of 20,000 and has use of petrol driven company car for private purposes throughout the tax year. The car has a list price of 15,000. CO2 emission 94 grams. No petrol is provided. So first we have to calculate the appropriate percentage, that is 16 plus 90 round down minus 55 divided by 5. So it is 16 plus 35 divided by 5. So it is 16 plus 7, 23%. So first we have to calculate the taxable benefit. So list price of car 15,000 multiplied by 23% gives you a taxable benefit, and that is 3,450. This is the taxable benefit, and 15.05% of taxable benefit will be calculated as class 1A contribution. So this is 519. So 519 is the amount, and answer is our A, because this is to be suffered by the company, employer. Next question, Robin is a sole trader. His tax adjusted trading profit for the year ended 31st July 22 is 70,000. In the year ended 31st July 21, he had trading loss of 20,000, which he decided to carry forward rather than offset against total income. So remember the fact that if the loss is to be carry forward, it can only be set off against the future year trading profit only, right? Robin's other income is 3,000 of saving income. How much are his assessable profit for the class 4 NIC purpose for the tax year 22-23? So importantly, they are not asking about the C class 4 contribution. They are just asking what is the assessable profit for class 4. So 70,000 is your profit, and if it is reduced by the previous year trading loss, the reduced amount would be 50,000. So it is the amount to be assessed. So remember that current year we have earned a profit of 70,000. In the previous year we have sustained a loss and decided at that time in the previous year that we will carry forward our losses to be set off against trading profit. So this year trading profit is set off against the previous year loss, and then remaining will be assessable. Muhammad, age 35, runs a sole trader business in the year ended 5th April 23. His accounting profit and tax adjusted trading profit is given you 11,400 and 12,800. Nicole is aged 75 and receives a state retirement pension. She also has a sole trader business. In the year 5th April 23, her accounting profit and tax adjusted trading profit is given to you as this. Identify by ticking the appropriate box who is required to pay class 2 NIC for the tax year 22-23. As a point that makes you confused is that I either have to consider the 11,400 or 12,800. So remember that you have to consider the 12,800, which is tax adjusted trading profit. While calculating class 2 or 4 contribution, you have to consider the profit 12,800. So he has to pay the class 2 tax, while in case of Nicole, she should not pay tax because he has achieved the state pension age. Remember, the contribution is from the age of 16 to the state pension age. So state pension age is 65 and she has an age of 75. So is not required to contribute NIC contribution class 2. Next, Sanjay commenced trading on 1st January 22 and prepared first set of account for the 6-month period 30 June 22. His second set of account were prepared for the year ended 30 June 23. Sanjay's tax adjusted trading profit were 8,800 for the first 6 months and for next year 24,400. What are the class 4 national insurance contribution which Sanjay should pay in respect of tax year 22-23? A very important question in which you have to consider that your accounting period is less than 12 months. And in case of accounting period, your accounting period if less than 12 months, what is the procedure of identification of second tax year? It is date of commencement of business and then add next 12 months. So we have to consider the profit for this period. Remember opening year rule, if our accounting period is equal to 12 months, then the treatment is different. If accounting period is less than 12 months, the treatment is different. And if accounting period is more than 12 months, treatment is different. So if the accounting period is less than 12 months, which is the case in this question, we have to consider that in the second tax year, how to identify the period or assessable profit. In the second tax year, we again have to consider the date of commencement to next 12 months. So this is the period. So from 1st January 22 to 30th June 22 the profit is given to you 8800. But for this period you have to find profit. It is 24,400 for the period of 12 months, and you have to consider the period profit for the period of 6 months. So it will be 12,200. So 8800 plus 12,200 will give you a profit of 21,000. So as a class 4 NIC contribution they are requiring, so 21,000 minus 12,570 into 10.25%, this is the contribution. 21,000 minus 12,570 multiplied by 1025%, this is 864. So remember that very careful that you have to consider the opening year rules, the rule for this particular question, and then you have to apply the NIC contribution. Next, Broadband Limited provide employment benefit to its employee on which two of the following benefit class 1A payable by Broadband. So one by one we study that occupational pension scheme contribution of 5% of the employee's salary. So this is said to be exempt, so no. Payment for parking space in a public car park near the office, again exempt benefit, so nay, no. Annual summer event costing 200 per event. So as its cost is more than 150 per head, so it is taxable benefit on which we have to calculate the class 1A contribution. Provision of smartphone of business and private use, exempt benefit. Membership of local sport club at a cost of 400 per annum, again taxable benefit. Mileage allowance of 5 penny per mile for cost of travel between employee's home and the company's office premises. As obviously the employee is entitled to receive 45 pennies, if he is receiving just 5 pennies, this is not said to be his or her taxable benefit. So it is C and E that are the right choice. Ishaq is a self-employed, and for the year ended 31st March 23, he paid 20,000 net into the personal pension plan. Ishaq's relevant earning is 1,10,000. What amount of income tax will Ishaq pay at the basic rate? So as he contributed net, so we need to make it gross. So 20,000 divided by 80%, the gross amount will be 25,000. So the basic rate band is 37,700 plus extended rate band as a result of gross contribution will be 62,700. And on this 62,700, how much tax is to be paid? This is 12,540. This is the amount of tax to be paid. So remember, we have to consider as a result of contribution that is made to personal pension fund net, we need to gross it up and extend the basic rate band. Abina has made the following gross contribution to her personal pension scheme over the past 3 tax years. So this has been given to you 42,000, 37,000 and 28,000. Abina's adjusted income did not exceed 2,40,000 in any tax year. What is the amount, a maximum gross contribution which Abina can make to her personal pension scheme for the tax year 22-23 without giving rise to an annual allowance charge? So we need to consider what is the unused annual allowance in the previous year. In the first year, if we consider the contribution is more than 40,000, so there is no unused allowance. In the second year, unused allowance is 3,000. In the third year, unused allowance is 12,000. Remember, annual allowance has a limit of 40,000. So if in the previous year 2021 he has contributed only 37,000, it means 3,000 of annual allowance is unused. And in case of 21-22, it is the 28,000 contribution, which means 40 minus 8, 28, 12,000 is unused annual allowance of the previous year 21-22. So in total this is 15,000. When added to the current year allowance of 40,000, this is the limit of 55,000 that is available to him. Austin, age 47, a sole trader, in the tax year 22-23 has trading income of 51,200. During the tax year 22-23, he paid 22,400 net into the personal pension scheme. Petra, age 45, employment income 1,20,000. She has now been a member of pension scheme until 22-23 when she paid 50,000 net into his personal pension contribution. Identify by taking the appropriate box who has made fully taxable tax relievable pension contribution in the tax year 22-23. So if we consider Austin, his 22,400 of net payment when gross up, it is 28,000. So 28,000 of his contribution is less than the 40,000 annual allowance amount. So he can have the tax relief available on the pension contribution. While in case of Petra, her contribution is 50,000 when it is to be gross up. This is 62,500. As Petra has never been in a registered pension scheme, so she has no unused previous annual allowance, and as her current year contribution of 62,500 is greater than 40,000 of annual allowance limit, so she attract annual allowance charge. Nimhi has just adjusted income for the tax year 22-23 of 2,70,000. During the year, she made personal pension contribution gross, and that is 1 lakh. Nimhi has no brought forward unused allowance. What is the amount of annual allowance charge to be added to Nimhi taxable income for the tax year 22-23? So as her income is greater than 2,40,000, we have to calculate how much it is greater to 2,40,000. This is 30,000. Make it half by multiply it with 50%. So it will be 15,000. So annual allowance of this Nimhi will be reduced from 40,000 by 15,000 to 25,000. Now she has an annual allowance of 25,000 available. As she has made a personal pension contribution of 1 lakh, 25,000 is available as annual allowance. Remaining 75,000 will attract annual allowance charge. So it is A. Remember, we have to consider that if a person has an income of adjusted income of more than 2,40,000, we have to find what is his adjusted annual allowance. So we find it first. How it will be find? The first step is find the excess amount over 2,40,000. Then the second step is multiply this by 50%, and this is the amount that will reduce the annual allowance. So we have considered that the annual allowance is now 25,000. As contribution is 1 lakh gross, it will be reduced by 25,000 of annual allowance available, and remaining will be attract annual allowance charge. Griff is employed by Gargoyle PLC on an annual salary of 50,000, and the question is, what are Griff's net relevant earning for the pension purpose? 50,000 is salary. Qualifying furnished holiday accommodation is 5,000. A warehouse let to a local business which generated taxable income of 8,000. She also has made a 4,000 gross donation to national charity under the gifted scheme. So one point to remember is that to calculate the relevant earning, we just have to add the furnished holiday accommodation, which is 5,000. So it is total 55,000. Remember, the contribution to national charity under gifted scheme and can only extend the basic rate band. And as far as property income is concerned, only furnished holiday accommodation is to be added for the purpose of calculating relevant earning. Roger is employed on an annual salary of 1,45,000. His employer has an occupational pension scheme of 2%, and the company pays 5% of his salary. Roger has also made a payment of 20,000 into the personal pension scheme. Paid, it means this is the net amount. What is the Roger's net income before deducting a personal loans for the tax year 22-23? So again remember this point then that the contribution to occupational pension scheme will reduce the income, but the contribution to personal pension scheme will extend the basic rate band. Second thing, while calculating the contribution to occupational pension scheme, first we have to deduct the contribution to occupational pension scheme, the employee's contribution to occupational pension scheme, and then we will adjust the personal loans. So we have to consider 1,45,000 and then deduct 2% of this, because Roger is paying 2% of this salary to the contribution. 1,45,000 into 2% is, this is 2,900. So 2,900 will be deducted and 1,42,100 is the net income. Next, Natalia's only income in the tax year 22-23 is trading income of 1 lakh. She also has an annual allowance charge of 10,000 as a result of making gross personal pension contribution of 50,000 in the tax year 22-23. What is her tax liability? So first we have to consider what is the extended basic rate band. That will be 37,700 plus 50,000. This is the extended basic rate band, 87,700. Now the income of this person is 1 lakh reduced by 12,570 of personal allowance, remaining would be 87,430. So out of 87,430, the whole income lies in the basic rate band. So we have to calculate tax at this at the rate of 20%, and this will be 17,486. Plus out of 10,000 of his annual allowance charge, 270 of charge will be taxed at 20%, because we have unused basic rate band of 270 available. How? Now we have a basic rate band of 87,700. Out of this 87,430 has been used, remaining 270 is to be considered. So this will be 54, and then remaining, as we have 10,000 of annual allowance, 270 has been taxed, remaining 9,730 will be taxed at the rate of 40%. So this will be 3,892. So total of these three figures this is 21,432. Now the question about administration and ethics have been solved in the other lecture of tax administration. So you can consider that lecture for the administration and ethics.